Okay, so look, straight away, this is absolute nonsense. Hi guys, so in this video, my team have put together a reel of American advisors giving advice. I'm going to react to them. The important reason why we're doing this, that my team are probably sick and tired of listening to me tell our audience, our followers, that, you know, don't listen to American content all the time because some things that happen in the States or in the UK doesn't translate to financial advice here in Ireland. Let's have a look at the videos they've picked out and check out my reactions.
What's up, you guys? It's Graham here. So many people have asked me to make a video of how I live for free by house hacking and investing in real estate. Now, one of the best ways to do this, and also one of the best ways to cut down on your expenses, is doing what I like to call house hacking. It's basically buying a multifamily property like you could in a duplex, triplex, fourplex, however many units, moving in one of the units and then renting out the others to cover your housing costs and expenses.
Okay, go straight away. This is not practical for Ireland because we don't have all those duplex type style houses. Automatically my brain is thinking, can't be done here, it's going to be issue with planning, and it's going to cost you a fortune if you're trying to move into a house. But very simple way of doing this. Being clever with your finances is probably move into a house, get a mortgage, buy a property, move in, rent out the spare room. That's house hacking here in Ireland. You can rent out your spare room, you get up to 14 grand a year tax free. That's always a really good idea. That will help you pay down your mortgage. But what I will say, if you do that and you do buy a house, rent out a spare room, say you buy a 3-bedroom house and it's you plus your partner or your spouse, and you have no kids, preferably speaking, people don't usually like renting the rooms and they have children, but if you do rent it out, the important thing is that you use that 14 grand to top up your mortgage repayment or else to invest that 14 grand. Don't not pay a mortgage and just use your money to spend stupidly. Continue to pay your mortgage but use the 14 grand tax free that's coming in to do something cool with it. So either pay your mortgage off quickly, or I would probably choose to invest that 14 grand. Now here's another tip for you. If you're going to bring in 14 grand tax free and you're on the higher rate of income tax, you would technically need a 28 grand rise in your salary to get that 14 grand net. So what you could do is maybe get the 14 grand, use that 14 grand a year for your disposable income and take less of an income from your job by making big contributions to your pension plan, getting tax relief. That way you're going to be sorted, especially if you could do that for maybe 10, 15 or 20 years. That's house hacking here in Ireland. Okay, so let's go to the next clip and see what the next piece of American content is. Looking forward to this one.
Easy to get kind of confused of exactly what this is and how to make money from it. I'm going to break it down and explain it as simply as I possibly can. A Roth IRA just stands for Individual Retirement Account.
Okay, I'm going to stop that one right away because it's nothing to do with Ireland. I get this a lot on my Instagram page, actually, people saying to me, can I get a Roth IRA here? Obviously, people do get confused between the two IRAs, one here and one over there. But basically, in America, what a Roth IRA is, as we just heard, is an individual retirement account. And it actually makes me laugh because in Ireland, we have zero education about pension plans. And we get a lot of messages of people saying, can I get a Roth IRA here? Yes, you can. It's called a pension fund. It's just a pension fund. There's a number of ways to call them here. You can have a personal retirement savings account. That's a PRSA. You can have a personal pension plan, a PPP. Or you can have an executive or a company pension plan where you and your employer might be paying into a company pension plan. But the amount of people that reach out to me and ask me, can they get an IRA here, a Roth IRA here? I'm going to say, you probably have a pension plan and work and you just don't realise that it's the exact same thing. Not going to watch the rest of this video, and there's no point in you watching content in America about a Roth IRA because it's just a pension plan and it's exactly what everybody can access here. Quick rundown on pensions. Number one, if you contribute to a pension plan in Ireland, there's two types of tax relief. Number one is the lower rate of income tax and two is the higher rate of income tax. So I'll break it down. If you put €100 into a pension, whether it's the personal pension plan, PRSA, company pension, etc., into a pension account, if you're on the higher income tax, you're going to get €40 back. So that's €100 in, €40 back. That's a 40% return before you even invest that money. If you're on the low rate of income tax, which generally means you'll earn less than 35 grand a year or thereabouts, you're going to get 20% back. So for every £100 you put in, you're getting 20 quid back off the government. That's phenomenal. You've got a 40% return or a 20% return. So guys, I can't stress how important pension planning is, but you don't need to be listening to American content talking about a Roth IRA. You just need to speak to an Irish financial planner that'll be able to help you set up the account and make the contributions. By law, your employer must allow you access to what's called a PRSA, a personal retirement savings account, through your payroll. So your tax is done automatically. They don't, by law, have to contribute to the pension plan where most people go wrong. If you have a company pension plan, your company employer has to pay in, and you usually have to pay in as well. Usually a percentage of your salary. So they might be paying in 5% and you pay in 5%. So 10% of your money's going in, But don't forget, your 5% is tax deductible. So you're getting maybe that 20 or 40% off. Pensions, complete no-brainer. But like I said, no point in me listening to the rest of that video on a Roth IRA. It means absolutely nothing to the Irish marketplace other than the fact that it's a pension. And yes, you can get a similar account here. I think they're actually a little bit better tax advantageous wise here in the Irish marketplace. Give us a shout, me and Hamid. So let's check out the next video. These are going well. I'm not getting a lot of video watch though, because as soon as I click on it, I know exactly what they're going to say. So I hope I haven't spoiled anything for you. But again, you're watching this content. I'm an Irish certified financial planner. My content should be worth more weight in gold to you than this content. But let's have a look.
And not pay these huge mutual fund fees that are usually hidden, that are eating away at your ability to grow and compound what you have into real wealth. And he was one of the earliest people to ever come up with this idea of promoting the idea of an index fund. An index fund, again, is really simple. Instead of buying Apple or PepsiCo or Coke or whoever the case may be, you can actually buy this index, which mimics the entire stock market. So you get a micro piece of all these companies, all the best companies, for example, in the...
Okay, so what Tony's actually talking about here is index funds. The biggest index fund I presume he's going to go into here is the S&P 500. And it's a really good concept. It's where you can buy the whole market, so you can literally track the S&P 500. You don't have to go in and buy the 500 different stocks that are in the S&P 500. You can track it on an index. Really, really good concept. Really good in America. They talk about a lot in America about just tracking the S&P 500 to make yourself a millionaire. Problem I have with this is that most people like Tony that are talking about this stuff haven't made their millions in the S&P 500. They've made their millions elsewhere. I'm a big believer in your income being your biggest driver in relation to making money. In Ireland as well, it's very hard to get an EFT that's based in America or an ETF that's based in America. It's also very, very difficult to find the likes of Robinhood here where you get those zero fees. And the other problem I have with people when they go towards a Robinhood style investing or DeGiro, wherever they're going to go, is they always end up not just investing in that index. They end up buying a little bit of Tesla, a little bit because they think they're day traders themselves. So you end up in a situation where you go in with the sole purpose of buying an index fund, but you think you're a genius and you end up going and buying individual stocks. So from my experience, and then people don't know when to get out of those stocks positions because they're not traders. So the big problem you have here is what's called behavioral finance. Is that you go in thinking you're great and you're making money on a daily basis, weekly basis. You start moving your position out of the index fund and you start doing yourself. Market corrects, you get out at the wrong time and all your profits are lost. So I think it's a very, very slippery slope. That's why typically speaking, we would only recommend a managed fund. I presume, let's listen to the rest of the video actually.
Example in the S&P 500 or the Standard & Poor's 500, if you're familiar with that.
S&P.
And so his idea has turned into a $7 trillion a year business. And another person I got to spend quite a bit of time with that you'll learn about here in the book and here with me is a gentleman who started Vanguard, and that's Jack Bogle. He took this idea and he bet his fortune on it. Both of these men understood something. And when I sat down with Burt Malkiel, the first thing I said was, look.
I presume Tony's going to get into the cost point of view here that, it's very, very cheap to go into an index fund and people's not going to eat into your funds. You got to remember that a managed fund here in Ireland, you're talking about maybe 1.25%. The managed fund we invest in, the Aspol Investment Club, has done over 11% per annum on average over the last 30 odd years. Like I said, that's on average over 30 years. Obviously, you're going to have ups and downs, etc. But the big key here is that when you're in a managed fund, you're getting the fund manager. Okay, 70 odd percent of fund managers won't be outperforming the market, but this fund's done exceptionally well over 30 years. Like I said, over 11% per annum. Now, what you have to remember here is that if you are going to be investing in stocks and shares and you've never done it before, you're going to experience that volatility. So when you buy the index is just the index. So when the index falls sharply, you're going to have to really, really tie yourself into that sharp fall. Most people won't do this. I've seen this happen in 2007, 2008, where people knew just stay invested over a very, very bad period of time, but fundamentally they don't, because it's their money and they have a relationship with the money and they're emotionally attached. So when the S&P 500 is going great and it's flying, you go, yeah, this is brilliant. It corrects by maybe 20, 30, 50%, whatever it can correct by. You take your position out then because you get fearful over your money, and then you go back in at a future point in time when it's higher. The managed fund I invest in can go between 75% equities and 25%, 20% equities and 100% equities. Which means if the market does have a massive crash, it's really bad, the fund manager who's managing over 2 billion, and you can access that for 1.25% or 1.5% a year depending on the contract, they are going to bring a position into where they're going to bring bonds into the portfolio and probably decrease your equity exposure. But you have someone managing that downside for you. And I think a lot of people that have maybe looked at index funds have been in a situation where they've never seen a market downturn. So if you're 25 watching this video, since you turned into an adult, you've never seen a market downturn. The last one was over 15 years ago. So, or high was over 15 years ago. So I do think it's really, really important that you look at the psychologically what you will do in a market downturn. That's why I'll always go towards the managed fund that we use. Now, what I will say is that we have got access to the Vanguard all market fund, which does give you S&P exposure in a pension contract. Now, pension contracts are different because people, and I can 100% have seen this time and time again. People come in for consultation. What's your pension? Don't know. What's your bank account? 23.5 grand. Because their cash money is so important to them, where their pension they don't really look at on a daily basis, because in their head it's 40 years away or 30 years away. So a good play would be the Vanguard fund through Standard Life, because it's going to be there for 20 or 30, 40 years in the pension. And even if it falls in value, you're probably not going to do anything about it because of the pension. Overall here, yes, I have to agree with Tony saying S&P, buying the whole market cheaply is great. If it's locked in a pension, you're not going to touch it. But your hard-earned cash that you're going to have a really, really strong relationship with, I'm still going to have to back the managed fund that we pick here at Ask Paul. So that's my thoughts of the S&P. Right, last video the team have put up for me. Let's see where we end up with this one. Let's go. What's this one?
I recommend that everybody have at least 2 credit cards. The first credit card is one that has a very low limit, let's say $2,000.
Okay, so look, straight away, this is absolute nonsense. This is Kevin O'Leary talking about how everyone should have 2 credit cards. No, definitely not.
No, definitely not.
What he's going to get into here, I can see it here on the thumbnail, is here's how many credit cards you should have. Actually, let me roll it for 1 second, make sure I'm on the right page of this video.
And that's the number you use on all the online services. If they get hacked, nobody can spend more than $2,000. That's how you protect yourself. The other card is the one you use when you actually buy things that are not online, and perhaps those purchases can be much more expensive. You need both. I carry 8 different credit cards in multiple currencies. I travel internationally, so I have credit cards for many different geographies. Swiss francs, British pounds, euros. I have all those cards because I want efficiency in my fees. My whole thing about credit cards is I don't like fees. I'm cheap. And having all these credit cards gives me diversity. It makes sure that I'm not being charged for currency conversion.
Kevin's talking about having multiple credit cards, and he has a point. I will give him a little bit of credit here. He has a point that if you go online, you're shopping with a credit card versus a debit card, and somebody steals your data, they can only spend whatever the limit is, so €2 grand or €1,000, whatever your limit is. So there is a little bit of protection in there, but the problem we have here in Ireland is that most people don't know how to use a credit card properly. This video is probably promoting the best use of a credit card, but he's also going to go in now and talk about building your credit score. In Ireland, we don't have a credit score. You don't need to build a credit score. I keep saying this time and time and time again. You do not need to have good credit before you go for a mortgage or before you go for any type of loan. There's only a thing called bad credit in Ireland. So if you take a credit card, you don't pay it back, you're going to have bad credit for 5 years, which will probably stop you from getting more credit, like a mortgage, like a car loan, etc. Now, I have a company credit card, so I'm using expenses for the company. I put in the credit card, but it's cleared automatically with the balance in the company. It's not a personal credit card. What I will say though is when it comes to credit cards, if you have an awful lot of money, so let's say you're making, let's say 20 grand in the bank even, or 10 grand, so you don't even have to be earning a massive amount of income. Let's say 20 grand in the bank and you're going to America and you're going on holidays. Technically speaking, getting a credit card for €1,000 or 500 quid, or on Plus do these kind of cards as well, and you can front load your cash onto them. So you can put 10 grand onto that credit card if you're going on a big expensive trip or something. Kevin also talks about the infinity of points or rewards that you get in credit cards in the States. Not many here in Ireland that do that. And he mentioned getting cash back every time you purchase because of inflation hit. Again, don't get too much in this video because it's really important. If you're living in America, you're not. You're watching this, you're probably living in Ireland. I just think many people in the States are going to talk about credit cards, about building credit, which I'm not a big fan of. And as Kevin says, he's a businessman, he does travel the globe, he needs multiple credit cards. If you have a business, it's probably okay to do that. But in your personal life, no, because ultimately speaking, when you get a credit card, the temptation to spend money that you don't have is there. And what we're trying to promote here at Ask Paul is a good, healthy relationship with money, making sure you're using your own cash flow, making sure you don't have any personal debt. Therefore, credit cards typically don't form part of a recommendation. Okay guys, that's the American content done. Hope you enjoyed that video. I think it is really, really important though that you subscribe to my channel. I am an Irish certified financial planner. We're trying to give out advice specifically to the Irish marketplace. So hit the subscribe, hit the like button if you don't mind. And also hit the bell so you get notifications of upcoming videos. Guys, if you want me to comment on any specific video from the UK or America or even other financial planners here in the Irish market for the crack, put the comment below, link the video in the comment section below, and I'll react to it for you. No problem at all. Have a good day.